Hello everyone and welcome to FinFAQ. In today's session, I am going to answer what is risk and what are the types of risk. We all know that difference between what is expected to be earned and what is earned is risk. That is, deviation from the expected return is known as risk. We can classify risk into following categories: default risk, liquidity risk, reinvestment risk, business risk, exchange rate risk and interest rate risk. Starting with what is default risk. It refers to the probability that borrowers will not be able to meet their commitment on paying the interest or the principal amount as scheduled. Generally, debt instruments are subject to default risk as they have pre-committed payouts. Moving on to liquidity risk. It is also known as marketability risk. It refers to the risk that the ease with which an investment can be bought or sold in the market. Thus, liquidity risk refers to the absence of liquidity in an instrument due to which either it has to be sold below its intrinsic value or at the cost of transaction cost is high. Generally, investment in property and art are subject to liquidity risk. Moving on to reinvestment risk. This arises from the probability that income flows received from investment may not be able to earn the same interest as original interest rate. Reinvestment risk can be high or low depending on the levels of interest rate at the time when the coupon income is received. Reinvestment risk is inversely proportional to the interest rate. Moving on to what is business risk. It refers to the risk which is caused by the factors that affect the operations of the company. Common sources of business risk include cost of raw material, employment cost, marketing, and distribution cost. Next, exchange rate risk. It is incurred due to changes in the exchange rate of domestic currency relative to a foreign currency. If domestic currency depreciates against foreign currency, the value of foreign asset increases and value of the domestic currency decreases, and vice versa. Last, interest rate risk. It refers to the risk that bond prices will fall in response to rising interest rate and rise in response to declining interest rate. That's all for today. Thank you.